Last week, Bitcoin formed a record weekly candle, which was probably the best one in the last 3 or 5 years. And, this growth happened somehow very easily and effortlessly. It was essentially driven by the liquidation of bears. And it turns out that Bitcoin had been in a sideways trend for 2 months in a very narrow range of $60,000 to $64,000, or rather, it should be said $62,000 to $64,000. And in fact, someone was building a long position, someone knowledgeable, someone powerful. And so the question arises, this is what we are discussing right now. The technical analysis of the chart will come a bit later, I trust that more. But still, no one has cancelled logic and common sense either. And so the question arises, if you have been building a position for 2 months, will you immediately push the price back to the starting point without distributing everything you bought to those wanting to buy Bitcoin and cryptocurrencies but at a very high price? And it seems to me that most likely we will not see an immediate decline. It is more likely to see either a sideways trend in which what was bought at lower levels will be distributed or even a continuation of the growth. And that is what we will be looking into today, by analyzing the Bitcoin chart. At the same time, it is absolutely not forbidden to have some deep correction to punish all those who are buying in the final stage of growth, for example, at the current, say, $80,000 or $78,000. Well, let's not speculate anymore and let's start analyzing the chart directly. We have weekly candles in front of us, but we will return to this chart a little later, and for now I will remove all the markings and show you the monthly candles. This is important. Look, we had 2 red candles, one of them was in May, the second one in June, and I said that if the August candle engulfs the June drop candle, then technically this will mean a trend change from bearish to bullish. If we see that the August candle engulfs 2 months of decline at once, then in that case the strength of this signal will be even higher. But it is very important to wait for the August candle to close, because if it reaches the June opening point, which was $73,674, and closes even slightly lower, then the situation will become very unclear, because then it might stick to the logic I spoke about earlier. That is, a large wave of decline, then a correction, then a continuation of the decline with an extreme, even an excessively permissible correction, but closing without engulfing the June candle. And if we don't see this engulfing by the end of August, then the risks are very high that this was after all a dead cat bounce, maybe not entirely dead, and that we could be led to new annual lows. But here and now, the monthly candles look very positive indeed. Let's wait for the end of August. And now let's switch over to the weekly candles where I have a lot of things marked up. But again, I'll remove the markings and show that Bitcoin has reached the 50-week moving average. I mentioned that a move into this area was begging to happen, but I didn't expect it to be this fast. So here is the markup. The key level, the most important one from my point of view here and now, is $78,430. Why is it important? Because at some point Bitcoin was growing at the end of 2024. In January 2025, it set a new all-time high in the area of 109,500, after which it went into a very deep correction and reached the level of $74,500, where it marked the lowest weekly candle close, after which it went to a new all-time high. And this turning point, this trend break, is very important. If we manage to consolidate above it, we could see another giant breakout candle to the upside. This is quite possible. And I will show you right now where this has already happened. Look right here. We had a distinct point where the trend attempted to reverse, and for a brief moment it actually succeeded. Let's go ahead and circle this specific spot on the chart to keep a close eye on it. So from this point the growth began. This is the level of $65,776. And now let's take a close look at it at this level. Look, the trend reversed here for a few weeks. We reached $82,200, broke through this important dashed level of $78,430, which I am saying right now is extremely important, and went down sharply, breaking through this reversal point. And then for all these 2 months, we traded below the level of $65,776. If its yellow color bothers you, let's make it, well, for example, green. this level here, and we break through it sharply and fly upwards. And now, just like the level of 65,776 was here, the level of 78,430 is acting as the same kind of level, because at one point it was a pivot point, we went below it, and now we could break through it very sharply and go very high, seeing another growth candle just like that one. Well, we had, roughly speaking, $63,000. Well, let's take a leap. Let's count up to 80, shall we? So that's $17,000. Well, consider that from this level, from 78, we add another 17,000 and get 91,000. 91,000 is a bit higher than the 100-week average. So it is very important, but at the same time, it is not at all forbidden to test this yellow zone. Why? Because here we also had two important resistances. We had a bounce here, also a local reversal, and here was the candle from which this massive drop began, and the engulfing of which signals a trend reversal. And for us, this reversal on the weekly candles happened last week. So, the weekly candles here and now are unequivocally pointing towards continued growth. But if we close the current week, and this is very important, below the level of $77,064, or at least with a red candle, then there is a high probability that we will see this yellow range, $72,800 to $73,670. I'm rounding immediately. So we have two options. Option number one is to have some kind of sideways movement pressed in this area. I don't think it will last very long. And then a powerful breakout to here, or maybe here, or maybe here towards new all-time highs. And finally, let's repeat the history of the S&P 500 index, which updated them many times while Bitcoin was, well, to put it mildly, sitting on the sidelines. But there is a second option. This is an option where we see a correction into this area, unlikely to go lower, based on what I said at the very beginning of the video. I mean, there's no point, well, no sense, no logic, right? To be building a position right here, right? And then return to this point with just a single candle, by going down here without having time to sell everything you've been buying for so long. I mean, it's illogical. Therefore, the maximum permissible correction that I see, well, down to this white level, is $71,280, unlikely to go lower. That is $71,073.5. That is also a possible option. And whether there will be a correction or not, well, the weekly candles will probably tell us. If we close the current week with a red candle, then most likely no, not even most likely, but with a very high probability this correction will happen. If the candle is green, then we might see a crazy breakout to the upside as early as next week or maybe even this week. Be prepared for that. But I don't see any reason for a global reversal to the downside, and the August candle will most likely confirm my expectations. We are waiting for the weekly close. This concludes the review, and I will try to describe more detailed information on the daily candles in my Telegram channel. I remind you that we conducted this review on the QuantFury platform. Here you can trade both cryptocurrencies and stock market shares, the forex market, and many other financial instruments, all with zero commissions. See you next time. Goodbye.